discuss what the market has in store for us, both in the near as well as the medium term. Sanjiv Bhasin from IIFL Securities on the show right now. Sanjiv, hi, good morning. Just such a quiet lull in the market. What are we staring at in the near as well as the medium term next?
Yeah, good morning, Aisha. Firstly, to all your viewers, a very, very happy Raksha Bandhan, and to all of you. Well, the lull is before the storm. The Argentine, the worst performing index, is up 236% year to date, and on a one-year basis, 360%. And I think emerging markets are just on the verge of a big breakout. India has had consolidation due to the overweight, weightage of Reliance and HDFC Bank, but I think it's coming back. Yesterday, you saw a glimpse of that on specialty chemical. China's stimulus package is now much awaited, which has seen US bond yields have the biggest fall yesterday, which says that all Fed, future actions are getting discounted, and you will be having a Christmas where there could be a Fed rate cut. So I think this is the best time to be in equities. Aside from the index, I had previously also told you this expiry will be 19,500. And next week, God willing, on Wednesday, I'll have tea with you in the morning in Bombay studio at 20,000.
Right, well, cheers to that, probably, Sanjeev, and look forward to having you here. But also curious to get in your take on one sector that was really a buzz yesterday, and some of those chemical stocks really had a terrific run. There is some rationale as well with respect to pricing and the China Plus One factor. Your take, do you like any names?
Yeah, morning, Avan, definitely. And you had to be contrarian to pick up SRF and Navin Fluoro. We have stressed on two stocks, if you recollect, in the last 2 months. Chemplast Sanmar, the biggest maker of PVC resins, and Jubilant Ingrevia, the erstwhile VAM Organics, which later got spun off and now is one of the biggest players. Particularly, they're getting a lot of business from Europe. And both these stocks, by the way, have hit all-time highs in the last 2 days when the Nifty has done nothing. So I continue to be very favorable on Jubilant Ingrevia, Chemplast Sanmar. As a disclosure, these are two of our top holdings. And I'm very, very bullish on Tata Chemicals, SRF and Navin Fluoro.
Sanjiv, the other pocket which has been really flaring up of late is the entire cap goods space, right? I mean, led, of course, by L&T, but look at the move on some of the other names, like a BHEL, for instance. What do you like from within here?
Correct. The most hated share in the stock market in the last 2 years is the biggest gainer. Who thought 25 rupees will be 50, 75, and now not willing to give up. And Aisha, it just tells you that, there's a saying, every dog has its day. Just as the Argentine index, the capital good mid-caps are playing out. A little bit of caution there. Stay with the big ones. Siemens, Bharat Forge, if you can term that as a capital good, Siemens, Bharat Forge, L&T, Thermax, and ABB. These are some of our preferred picks which are in our portfolio as a disclosure. We are not going overweight on them. We are staying put. But like we said, these are the themes. And that is why you can see that green shoots emerging on the capex side after 20 years tells you that there's a long way to go for, the whole economy to start showing you much better number and colors.
Mr. Bhasin, this is Anisha also joining in the conversation. I was just looking at the YTD performance, and the sector which has done the best this year is real estate pack. Which are the stocks you like from that?
Morning, Anisha. My pick over there and a dark horse play is IRCTC. The rest have all run up fairly high, whether an RVNL or an IRFT. I'm not chasing those. I can tell the investors that there is no better business than what IRCTC is in. It had an overhang of a stock when the government diluted some equity in December of last year at 680. And from there, it has refused to go up. But if you see the type of ticketing, the near NER water business and the catering, this is poised to go places. I'm giving you an 800 rupee target maybe in the next 6 months. But I'm telling you the business is superb. So, just stay with the business which it is in. And IRCTC can be a huge dark horse, at least a 30% upside in the next 1 year.
From the railway pack, Mr. Bhasin, what I was asking you was also on the real estate pack and the realty stocks.
Well, Godrej Property and DLF refused to give up. Those have been two of our top picks, and they are already up more than 60%. We want to be with the big players. Yes, there is a lot of run up in the small names. If you recall at 115 when all doom and gloom was there on India Bull Real Estate. I stuck my neck out that there is no promoter. Hence, this stock can be a huge outperformer. Now, don't chase it at 190, but look for some ideas which are there. And I continue to think DLF and Godrej Property are the biggest of biggies, and you should be focused on the large caps rather than try and chase some extra beta or extra delta on the smaller ones.
Okay, fair enough. That's a view coming in on the entire real estate basket. But curious about your take, Sanjiv, when it comes to some of these new age tech companies. For instance, Zomato has been in the news of late. What's your outlook as to how you're looking at the efforts for path to profitability for a lot of these companies, and what would be your picks?
So, Avan, Zomato, Paytm, and PB Fintech are three stocks which are in our portfolio. We have been adding them in the last 6 months, and we don't intend to do any short-term profit booking or trading in them. These are 2, 3, 5-year ideas, and I think there is miles to go before I sleep. You've seen a lot of the old hands change, ownership here, which is very positive. But just look at the businesses, all three of them, Zomato, Paytm, and PB Fintech. And my advice to the retail investor is don't look at the lows, because you'll never able to make an entry. Look at the highs. And then you will think that these are still businesses which have enough potential of giving returns. So, like I said, as a disclosure, all these three are in our top picks. We continue to be very, very favorable on Paytm, PB Fintech, and Zomato on declines. But we think that, like we said, these are businesses for the next 3 years, and there is no short-term view on them.
Sanjeev, have you taken a look at Suzlon? I mean, that stock from a single-digit penny stock has moved all the way up to $24 now.
Well, that's the power of restructuring the balance sheet, ownership change, and Aisha, the magic of mid-cap money which is being chased by mutual funds who have lagged in returns. And read my lips, the last 7 months, these guys were sitting on more than 7% cash. And now with the left out feeling huge and humongous, they are chasing high beta ideas. So at this time, my call would be, I am more bullish on large cap stocks. So I am chasing the likes of LTIM, Reliance, Apollo Hospital, and the largest banks, ICICI Access. Those are 5 of my big ideas here. If you have Suzlon, stay with it, but don't chase it at these prices when a stock has already tripled.
We'll also be focusing very closely on the entire auto sector with respect to the auto sales numbers, and reports from the likes of Jefferies and Nomura seem to be indicating that this time around we could see a healthy growth. 9 to 12% is what they're pegging in for the most part for the likes of Ashok Leyland, M&M, and even a Maruti, saying that passenger vehicle volumes for the industry are likely to be higher by about 9%. Two-wheeler industry volumes is likely to be a bit sluggish, so lower this time around. MHCV could see a double-digit uptick, close to 20%. And for tractors as well, it could be a bit flattish. What has been your assessment of how things have shaped up within auto, Sanjeev, and what is it that you're penciling in for the sales numbers?
Well, Avan, we are on the anvil of a very superb festive season. The rainfall has been rather splendid, except for the month of August. And I think that rural incomes are now going to charge up some of the two-wheelers. So 3 names which we are holding and which we are advocating: Maruti in the passenger vehicle, Ashok Leyland in the CV segment, and Bajaj Auto in the two-wheeler segment. All 3 in their categories are market leaders and will only gather momentum. In the mid-cap, if you want, you can chase a Bosch closer to 18,000, because in the OEM space, that is one stock which is pedigree and which has initiated and invested large amounts into semiconductor, the returns of which will be played out maybe in FY24.
In fact, on the power stock, Mr. Bhasin, what's your top bet?
Well, Anisha, we've held REC PFC for the last 2 years, and we are not changing our view on both the power lenders. You've seen power distribution companies do the best, and recoveries, particularly on state electricity boards, are the best ever in history. In fact, where I stay in Gurgaon, DHBBNL has declared a dividend first time in 30 years, which tells you PFC, REC are in the best place ever on the lowest cost of fund. My dark horse play is again IEX. You cannot have a trading platform, even though there will be competition which has 93% market share. lose, trade at this valuation. I am looking at volumes growing at not 10 but 12 but 15 times, maybe more in the next 3 years. And the platform is brilliant. So you can't have a better play than IEX. Avoid the noise. This is the time to be in IEX and IRCTC, which are two brilliant blue chip businesses. Now the businesses can underperform for some time, but the longer term story on IEX in power and IRCTC on railways is the best you can play on the Indian PSUs.
Okay, fair enough. That's the view coming in. Meantime,
Sanjeev, you were quite positive on the mid-cap IT names, the likes of Coforge. Tech Mahindra was one of those brilliant finds which has done very well for the investors. What next in the IT sector that you're watching out for?
LTIM, the best play, which is going to be star as far as the AI circle goes, and which is seeing huge amount of order inflows and high margins. Their attrition has been the lowest. And I think LTIM is one large cap which I can now bet on because it's on the index. So like I said, Anisha, I am focusing on large caps in the index. LTIM, Reliance, ICICI Bank, Axis, which you mentioned the reasons. And if we are going to see Bank Nifty expire above 45,000, then both these large caps have to join. But LTIM is my stock for this from here till Diwali. 6,000 plus is coming on LTIM by this Diwali.
6,000 on LTI entry, so almost 1,000 rupees what Mr. Bhasin is pointing by Diwali itself. So just in a couple of months, probably you're in for making $1,000 there. So that was the take when it comes to the IT counters as well. But shifting focus and talking about what else is happening in the market, and of course we have seen that recently defense stocks have been doing rather well. The entire manufacturing theme is something which is picking up. Sanjeev, wanted to get your take. Would you bet on the likes of Dixon, Amber, even Voltas for that matter, which was one of your picks earlier? Or would you stay away from the manufacturing theme because all of these stocks have run up?
Correct. A little bit of caution, Anisha, because the momentum is very strong and you've seen the mid-cap index, the small cap all outperform. As a disclosure, Voltas from 750 has been one of our top picks. It continues to be. It is not just an electrical play. It has huge order inflows in the Middle East, and we think that is one place where Voltas can outperform. But like we said, we are of the opinion that large caps give you a better opportunity, because if I'm looking at 20,000 coming, then I think it will be large cap which will lead. So LTIM, Apollo Hospital, Reliance, ICICI and Axis, these 5 stocks should make up your portfolio for the run up to 20,000.
enough. Meantime then, Sanjeev, take us through your view on the entire consumer sector, given that valuations are fairly rich. What's the outlook when it comes to the earnings forecasts?
Well, you rightly put it. Earnings are rich and maybe there is a little squeeze on margins given that interest costs have picked up. But I still think Godrej Consumer, which has been our pick from 650 levels, is going to be an outperformer. And I think that on declines, this Marico, this is one stock which I am very, very bullish. So Godrej Consumer and Marico will make up my 2 stocks in this consumer durables place. On the consumer discretionary, I would still, go with the Maruti in autos. Maruti can be a 12,000 stock. And yesterday you heard from the management that in the next 8 years, there's a capex of almost 50,000 crore, which they are putting on the anvil. So, when big corporates put money where their mouth is, they are bullish on the longer term. And I think that 12,000 on Maruti can easily be achieved by next Diwali.
Steve, since you have been so bullish on Reliance Industries, I wanted to understand why so. Because the drawdown from the AGM has been a little unimpressive in terms of the short-term triggers being amiss. We've seen how the stock performed post the AGM, and disappointment followed through yesterday as well on RIL.
Well, Aisha, that's a little bit of consolidation. What did you expect at the AGM? Another bonus or some big announcement? They've told you that the capex on the oils to chemical is fully played out. That is being shifted. That is a realization as a cash cow now. The capex on the 3G and on the 5G is almost complete. But look at the longer term. On September 19th, they will launch the 5G in every household. Now, there, like I said, Mukesh Ambaniji's vision is not of 10 or 15. He thinks of 150 crore people. And the annual of geofinance and the succession was what most people were, more clouded on. But the underlying businesses, whether a Microsoft tie-up or a Blackstone or the way forward on 5G and the market share gains which they have done in telecom. So Reliance is now only not oils to chemical. It is all about 5G. It is all about retail, and you will slowly but surely hear the outcomings of that. Yes, the stock may have underperformed, but if we are going to 20,000, then Reliance is going back to 2,700.
The index is going to 20,000. Reliance will have to play a part in 2,700 levels is what we can expect on Reliance Industries. That's the word coming in from Sanjiv Bhasin.
Sanjeev, you were talking about your picks from within the railway pack and you mentioned IRCTC. I wanted to understand about defense because many believe that a large part of the rally is already behind us in the defense names. What's your view here?
Correct. I'm in that camp. I'm not going to chase HAL or BAL. They are in our portfolio, but we've skimmed down our portfolio in them and we've taken some profit home. The order flow may be strong and the outlook very bullish, but the execution will take time. Plus, if the China one factor plays out and you see a rally in commodities, then that could definitely hurt margins. So stay away would be my call. Don't get chased by the momentum. There are enough other like ideas which I've given you in the large caps which fit the bill perfectly if you want to stay invested. But like I said, these have run up far in excess of what the returns and the risk reward may not be favorable here.
All right, let's shift gears. Thanks so much, Sanjeev, for sharing with us your stock ideas and views on the markets.